Good morning, everyone, and thank you for joining us today on Morning Markets. I'm joined by Raj, one of our investment directors here at True Potential today, to discuss the inflation outlook and the inflation data that we've had from the UK this morning. Clearly, we discussed this at the beginning of the week. Inflation was set to rise. Forecasts were looking for around 9.8, 9.9 from the 9.4 that we saw in June. We've managed to make it into double digits, the first time in 40 years. I think we have to look back to 1982 or thereabouts to get a similar, comparable reading. Maybe, Raj, you could bring that to life for our viewers, just what have been the main drivers of that uplift inflation that we've seen month on month.
I think, as you rightly pointed out, you have to go back to February 1982 to see these double-digit numbers. So that the biggest rise has come from the food and drinks part of it, particularly month over month, where we saw almost 2.2% rise on month, which we haven't seen for a very long time. Those prices of foods are as clearly baking into the overall housing pressures. And also, if you look at the core side of it, it's not only the food prices, but also the housing and housing-related electricity and gas supplies, and all those are feeding into the overall
And would
pressures.
it be fair to say that some of those food price rises that we're seeing are sort of the second-order effects of rising energy prices, rising input costs that manufacturers are having now to try and pass through?
That's very, very much we saw from many companies also reporting that they have to be able to pass to consumers those higher cost prices. We see them in supermarkets. We go every food purchase you probably are increasing by 10-12% depending on how. And we also saw Heinz and Tesco tussle couple of months back where they were a big tussle. They were not struggling to
And when
pass.
we think about that in general, we've also got the Bank of England. Their recent report talked about inflation continuing to move higher. So we're talking about 10.1% today for July, but their forecasts seem to suggest something north of 13% as we go into the end of the third quarter and the fourth quarter of this year. What's really driving that further increase?
I think that this is the one that we may get some relief from commodity prices, lower prices in next month. But again, we hit the October where we see the energy price cap again being lifted by almost 75%. That'll clearly put another leg up in the inflation, and that's what has been baked into Bank of England forecast for up through the first quarter of next year.
And do we have a sense of how the bank are dealing with the rebate that all households will receive as a help to deal with that rising cost?
That's still unclear how the ONS, the Office of National Statistics, will treat the payment or rebate, and how it's been baked out, how it's been crafted into the consumers as well. So I think it's still a bit unclear, but clearly that 12-13% inflation is going to be hit come October and through to February.
And when we look at a number of other economies over recent days have been reporting a decline in their headline rate of inflation. If we look at the US, we look at what we saw in Canada to an extent yesterday. Is that likely to feed through into what we're seeing in UK data, but with more significant lag? Is that the general thinking there, or?
I think it's probably right that we'll probably see some softness, and that is, if you look at the numbers from the US or from Canada or from elsewhere, they're mainly related to the softer commodity prices. Oil prices is the big part. The gasoline prices are up off around $1 somewhere. So I think that is a big part of it. I think the only thing is probably with in the UK is slightly peculiar because of the currency element to it. We are the large importers of most of the commodities, so our weakness in currency does not translate as effectively as the dollar has been the strength.
So some of that, if we think about the US and Canada, producers of a lot of their own energy, so nearly self-sufficient in that regard is a positive for them.
Yeah, we may get it, but it may be delayed and a bit more muted as we go along.
And just then thinking about asset markets, what's been the impact today in terms of the currency, sterling, or in the gilt market with the move to that higher level of inflation?
I think it was fairly expected. You would expect the gilts to come under pressure, which we saw gilts come under pressure. We also saw gilts come under pressure yesterday as well. That was largely on the wage data, which came in higher than expected. On the flip side, sterling has shown some weakness. Some strength this morning. So I think the baking is that the Bank of England may have to jack up rates a little bit more.
And I
high.
think the market expectation at the moment is around 50 basis points
50
for their
basis
next, or 0.5% for
Zero
their
point,
next meeting.
yeah, 0.5% expected, and I think there were some hopes that they may take a pause. I think these inflation prints may put that to some.
So inflation with yesterday's wage data maybe pushed their hand a little bit at this
bit,
point.
yeah.
Okay. And then just thinking about what we saw yesterday in broader asset markets, is there anything that you wanted to bring to life for our viewers from that?
I think largely very calm markets. Overall risk assets were a bit stronger than overall.
And when we talk about risk assets, we mean
equities.
in general.
Equities in general have been fairly strong. The only bit which was a little bit soft yesterday was Japanese equities, and Chinese equities just continued momentum from weaker economic data in China earlier this week, and there was some softer data in Japan.
Okay.
Not much move. We also saw some move in the oil market.
Yeah.
Oil was markedly weak, around 2% drop.
And that builds on some of the trends that we've been seeing, and may go back to that where we started this conversation. It might help with the inflation backdrop as we look forward.
Yeah.
When we think about the remainder of today and we look forward, there's a few interesting US data points that we'll certainly be commenting on tomorrow.
I think the biggest one of them is the US retail sales data, which have been a bit of mixed bag. If you look at you get a mixed sentiment picture from consumer, but it has reasonably held well. So expectations are for a reasonable number.
Yeah.
But I think we'll see how it goes out, and I think there's another one which is we get some minutes from the July FOMC meetings that could also be a mover for.
Okay. Thanks, Raj, for joining us on Morning Markets today, and thank you for joining us and hearing about the UK inflation data. Please join us again tomorrow. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.